Hello, you're watching Dukascopy TV. I'm Monica Gibson. Bjørn Roger Wilhelmsen joins me down the line now from Oslo for an economic update on Norway. Bjørn, Norway coal inflation dipped from a previous 0.6% to 0.2% in May. Looking ahead, we have the rate decision next month, but despite the drop, to your mind, is it still unlikely for the market to be pricing in rate cuts?
Yes, in the short term, it is unlikely that the market will be pricing in rate cuts. NorgesBank will present a new interest rate projection, and this new interest rate forecast will remain quite neutral, I think, and will indicate unchanged rates until the fourth quarter of 2015, I think.
Last month, Norway cut its 2014 growth forecast and said it would spend more of its oil revenues to guide the economy through a rough patch. Although economic forecasts have been better than expected in recent months and housing prices started to rise again after a dip, some economists think the slowdown will persist. What do you think?
I think we will witness a slowdown in two factors or two industries that have been supporting growth in Norway over the past few years, and that is housing construction and its oil investments. And we are already seeing a slowdown in housing constructions now, and that will be even more evident in the data going forward. When it comes to oil investments, that's a very big factor, it's a very important sector for Norway, and I think oil investments will hold up quite well this year, but from next year I think we will see a slowdown, and that will lead to weaker growth in Norway and probably higher unemployment rates.
As we know, the ECB took policy into new realms by delving into negative rates and also unleashed the LTRO. What impact, if any, do you think this will have on sentiment towards Norwegian markets? Will the rate hikes forecast for 2015/16 now be priced out?
I think the ECB action last week gives a strong incentives for the market to take on more risk. So the risk appetite is increasing, and that means demand for carry. And we are already seeing increased demand for Norwegian fixed income instruments, and in particular Norwegian government bonds. And interest rates expectations in the market have already come down a little bit since the ECB meeting, and I think we will see the market eventually price out any hikes that are left in the curve.
Some strategists believe the liquidity measures from the ECB and the cut into negative territory will support the NOK versus the euro. How do you see this playing out over the coming months?
Yes, I think a couple of opposite forces there, but I think in isolation, I think the ECB action was positive for the Norwegian krona, and that relates partly to my answer in the previous questions that the ECB action gives a strong incentives for investors to take on risk, and they will increase the demand for carry, and that should be supportive for the Norwegian krona. And also, I mean, the euro area is the largest trading partner for Norway, and in my personal view is that the action taken by the ECB will also, in general, lower the euro, and that will also mean a weakening of the euro against the Norwegian krona. And but on the other hand, the aggressive action could also lead to speculation that the NorgesBank may have to follow the ECB action and start considering rate cuts. Although I don't think that will happen at the board meeting next week. That could be an issue later this year, and if the market starts pricing in cuts in Norway, that will lead to a weakening of the Norwegian krona. I think in the short term, actually, we will see a continuing strengthening of the Norwegian krona over the coming next couple of weeks, at least. I think we will see it will fall below the 8 figure and go down to around 780, and in the course of the next 3 months.
Bjørn, thank you so much for your time and insights today. It's been a pleasure. Well, that's all from Bjørn and myself for the moment, but make sure you click back for many more exclusive interviews. Goodbye for now, though.